Hello traders, since I do not plan on trading in January, the first installment in the series is going to be a fleshed out trade outline on how I will get funded in 2024. Doubt you'll find a more comprehensive guide on YouTube. So this outline is taken right from my business plan I created for my LLC. Shout out JCap for the idea. This video I've realized will have to come in parts. After writing the script, it took me hours. So part one is just going to be my monthly analysis. I'm going to walk you through January to help you better understand how I use this information in real time. I've linked the 2016-2017 ICT mentorship I created in the description, but I'll mention specific videos when they're specifically useful. So let's get started. So for my analysis, I derive a bias from a monthly, weekly, and daily basis. I start every new month with a new monthly analysis, creating likely scenarios for the monthly candle to form. I start this analysis with a fundamental view. I need to understand the current macro and sentiment in the marketplace before moving on to the charts. I've noticed that if I start with price action, then I'll have a weighted bias towards recent movements rather than forming a solid narrative of the month overall. For fundamentals on my monthly analysis, I look at two metrics. I look at seasonality and interest rate differentials. Seasonality helps create a roadmap. Assets do not have to move in the seasonality in effect, and movements against major seasonals should be studied. For January, the seasonality for the asset I trade, the S&P futures contract, suggests bearishness, with the strongest bearish seasonal tendency being the last week of the month. There happens to be a FOMC rate decision on Wednesday, January 31st, but we'll get into that later. I recommend watching the first lesson in month 10 of the ICT 2016-2017 mentorship for the seasonal tendencies I use here. Again, this will be linked in the description. Next, we have interest rates. I look at the major interest rates and how they compare to each other. Specifically, I look for how the US ranks on the spectrum and study the most recent hikes or cuts. I'll study the language Powell uses in his statements and read the sentiment of other traders for what they think will happen next. This is not to piggyback off their ideas, but to get a general consensus of risk on to risk off sentiment across the board. I have a template I use to briefly look at all the majors for studying past hikes and cuts, and that looks like this. So I have the majors: US, Euro, Canada, New Zealand, Japan, Switzerland, Australia, and United Kingdom. And you can see that this is what their interest rate looks like. You type it in like that, and this shows the interest rates as it changes. In January, I know the most recent suggestion that Powell raised rates too quickly, as well as the current interest rate of 5.5, as we can see here, ranking at the top of the majors, tied with the New Zealand dollar. Now moving on to the technicals. I split this into 5 different sections: quarterly shifts, market structures, intermarket analysis, market profiles, and the PD array matrix. For this section, I use one template that has 4 different charts. Kind of looks like this, with ES on the left and Q on the right, the DXY on the bottom left, and the YM on the bottom right. They are synced to interval and data range. So first we have quarterly shifts. This is a study of the 9 to 18 month market trend and justifying why this trend is likely to continue. So looking at this template here, I already have everything on here, but we're looking at the 4 month, the 9 month, and the 18 month vertical lines here. And we can see that the past 18 months has been moving higher, same with the past 9 months. And it's not smart to try to pick a top here. You'll see a lot of retail with this recent bearish movement. Think that this is, a double top here, and then price is just going to reverse lower. I'll get into this more. This is one of my favorite models here. Now, seasonality suggests bearishness, but the quarterly shift suggests bullishness. You don't want to fight this 18-month trend. So now I need to consider that this section will have a weight in the risk that I allow myself in the marketplace. I should consider easier objectives and the reduction in the average time in the marketplace. So the next section we have in my technical analysis is market structure. You can see I have them labeled here. This can be classified as the classic 3-bar pattern: swing high and swing low. So this is swing high, not to swing low. I'm sure you're very familiar with this pattern, even if you're not a student of ICT. I really like the episode 12 of the 2022 ICT mentorship regarding long-term, intermediate term, and short-term highs and lows, and highly recommend you watch it if you haven't. In this section, I look to see what highs and lows are currently in control of price. For January, I see that price is moving away from the created intermediate term low here and has recently broken this intermediate term high here, meaning that this high is now in control of price. It's these 2 levels that are in control of price. I'm watching to see if ES will break this high here and have this level noted as this blue line. You'll see that it says delayed sympathy rally. I'll get into that later. When watching swing highs and lows or other PD arrays, I like to reference the reaction at these levels as displacing through, which we're starting to see here with this big displacement candle here. Rejecting completely, so like a double top kind of formation, and then price may come back to break it later after forming more bearish sentiment, or having lackluster displacement like a wick, kind of like this reaction here on Dow, where we had the short-term high and then we kind of wicked above it and then rejected here. How price reacts at these levels can give you an indication of current market strength, or also known as institutional order flow. All right, the next section is going to be intermarket analysis. This is the longest and requires a completely separate template for my analysis. So I use this template here. You'll see I have a couple on here already. But first, we're going to look at bonds. So what I do is I look at the current 30-year, the 10-year, the 5-year, and the 2-year. And since this is a new quarter, I like to start on the 3-month chart on each of these. So I'll go to the 3-month chart now. I'll look at the salient PD arrays. I'll annotate them as I did here, and the relationship between each of these. So an example being the 2-year reaching above this 3-month high here, which we did not see in the 5-year, the 10-year, or the 30-year. The 2-year is more reactive near term, so I mark this divergence for sympathy rallies rather than an SMT divergence. I'll look back onto these charts later to see if a divergence occurs. Maybe the 5-year retraces more into this 3-month bearish order block I have marked here. I'd like to also note specific scenarios that could occur. Let's say a divergence does occur, it would require a failure swing on the 30-year to reject at this 3-month CIVI I have marked. That comes from all the way over here. I like the CIVI because we had a bounce here and then moved higher. We kind of rejected and moved below the short-term low, and then rejected again. It also converges with this wick of this order block here. So there's a lot of accumulation distribution at this level. So in a scenario where I do expect a failure swing, it's too early right now, I would look for a displacement away from this premium array. Moving into the monthly chart, we can isolate the 30-year bonds and notice the converging monthly bearish order block here and monthly CIVI that's right above this 3-month CIVI. I see this as a beautiful rejection point for a short-term high to form here. We even closed below this bearish order block. And while I will not force a divergence, I see a clear scenario of a failure swing for the 30-year unfolding, while the 5 and 2-year have room to spike a little bit higher into these premium arrays. So we just had like an IO Fed on the monthly. We can move higher and create another divergence here, having a lower high and then maybe a higher high. I'm not trading bonds, so I don't go super in depth with them, but these are just scenarios that could possibly unfold. So in the next section, I keep the 30-year and then I look at the Goldman Sachs Commodity Index. This is energy weighted. I look at the CRB, which is TRJEFF-CRB, which is grains and agricultural weighted. And then lastly, the XME, which is an S&P metals and mining sector ETF. Now, this comes straight from the month 5, lesson 3 of the 2016-2017 ICT mentorship about intermarket analysis. In this lecture, ICT mentions to use the Goldman Sachs Industrial Metals Index for a weighted average targeting global trends, and for the life of me, I could not find this asset on TradingView. So I like to use this ETF instead. While this works for me, let me know in the comments if there's a better asset to look at for this metric. Firstly, let's go to the 3-month chart. Knowing the relationship between bonds and commodities being inverse, I'm going to look for divergences in these three to match the 30-year bonds. So first and foremost, on the 3-month chart, I'm noticing these market profiles are drastically different. We have the Goldman Sachs Commodity Index retracing lower, the CRB consolidating, while the XME is moving higher. These are all completely different. There's a stark difference between the Goldman Sachs Commodity Index and the 30-year bonds, with both of them moving in tandem lower. From here, I note the Goldman Sachs Commodity Index as the laggard, while XME is the leader of the overall multi-year trend. I like to also note that the previous 3-month candle on the Goldman Sachs Commodity Index cleared the buy side from the past 6 months before continuing lower. This looks like an impulsive protraction here, that draws my eye to this low, which was already broken, and then this low here. I'm moving down to a monthly chart. In isolating the commodity index, I see relatively equal lows here that seem likely for the commodity index to purge, and then also this long-term high here for XM8. Coupling this idea with the expectation of the 30-year bonds to consolidate and distribute in these premium arrays, maybe even retrace lower, this makes XME the target asset I would expect to have a grand expansion higher. I drew a fib from this low to this high, but target this fib extension first if we do reach above this high. Moving on, this next section studies the DXY, gold, and Bitcoin. We can see the aggressive bullish tear the DXY has been on, and the relationship between gold is inversely correlated, meaning that this movement would have bearish weight on gold. Instead, gold is being seen held in this range here for the past 3 years. As the DXY retraces lower, gold has seen a movement higher but has not exited the range yet, with the most recent expansion off of this level being into this 3-month bearish rejection block right here. For Bitcoin, we can see the impulsive movement of the DXY moving lower, having this inverse relationship with an impulsive movement higher. I noted this 3-month consequent encroachment here that price has broken through. In a scenario where the DXY continues to retrace, it can be expected for the leader, Bitcoin, to continue tearing higher. We need to couple this idea with the notes from the previous intermarket sections, specifically the idea that bonds will have trouble continuing higher, possibly retracing. This narrative provides a difficult scenario for a further retracing dollar, meaning short term, it can be expected to have a risk-off retracement with the DXY moving higher and the pressure on gold and Bitcoin to move lower. We can logically expect this scenario to add more bearish weight on gold to retrace than Bitcoin being the laggard of the two. And being that gold is the laggard of these two, we can conclude that there'd be more bearish weight on gold to move lower than Bitcoin. Let's move on to the monthly chart. We can see if the DXY is going to retrace. I'm aiming for this monthly civvy here, possibly even expanding into this balanced price range here if we do start displacing higher. For gold, I see a retracement into this monthly bullish order block here, which is these 2 consecutive down close candles before moving higher. We can move even lower, but for now I'm just mentioning this point here. And then for Bitcoin, I had an expectation for this monthly balanced price range here to reject lower. I was aiming for this 3-month consequent encroachment. While I'm recording this, price did in fact move to this level. And now I was also aiming for this balanced price range down here for the next objective. So I'm just going to draw that arrow here now. Since Bitcoin is the leader, I need to be careful counter trend forecasting this to retrace lower. So that's why I had this objective first. We already reached it. Bitcoin is very reactive. So I'm thinking we'll probably reach down into this level here. The high of that being 38.69.0. We're going to toggle this template again to view 2 charts. These charts being crude oil and USDCAD. We'll go back to the 3-month chart here. And first and foremost, these assets are negatively correlated. Since Canada is the leading export of oil, as oil increases, USDCAD should decrease. Reviewing this 3-month chart, we notice a similar protraction here of that studied on the Goldman Sachs Commodity Index. This movement can be seen as an intermediate term low on USDCAD. I'm fading this move on crude oil for the expectation of a continued retracement lower, below the intermediate term low here created. And then this respective analysis would be inverse to USDCAD with movements higher. Moving down into the monthly chart, we can see I have some arrows and some eyes on here. You can see this inversion buy side imbalance, sell side inefficiency marked. And I have an eye down here for this low here. I'm thinking that crude oil could continue lower below this sell side liquidity pool here. I think a relatively safe low-hanging fruit objective would be this rejection block here at 65.72. But I'm looking for price to exit this dealing range and move into this mean threshold of this order block here. We had lackluster displacement into this order block and then had this quarterly shift sweep. So I'm thinking we're just going to continue higher. So like a Judas swing, moving phase 1, phase 2, and then phase 3. This is the Judas swing, or impulsive protraction. Referencing the previous section of my analysis, I expect a risk-off retracement before continuing the risk-on trend that we've been on. This means the DXY will move higher, making USDCAD a great asset to look for long-term bullish plays and exits outside of the current consolidation. That also lines up with the seasonality. I used to trade USDCAD, so I know these seasonalities very well. And it usually looks like a pop above a notable high and then a movement lower. If I were to go long on this asset, I wouldn't want this low to be broken. I would like this bullish rejection block to hold this low and cause this reversal higher. Low hanging fruit objective being this consequent encroachment above these relatively equal highs here. And that is at 1.39082. So the next section we have, we're going to move back to a 3-chart template. And we're going to be looking at gold versus the Australian dollar and the New Zealand dollar. Go back to a 3-month chart. And right now I'm looking for the leader of these two compared to gold. These are both exports of gold. So as gold moves higher, AUD moves higher, and the New Zealand dollar also moves higher. So on the 3-month chart, we can see the bullish SMT divergence at these lows here, with the New Zealand dollar being the laggard. These foreign currencies are currently at the 3-month bearish order block and rejecting. Moving down into the monthly chart, we note the expectation of gold to retrace and it's likely that these two assets will follow. With New Zealand being the laggard, it makes it the preferred asset for scouting shorting opportunities. A low-hanging fruit objective would be this monthly bearish order block that we've almost reached into, but I'd rather hold for this inefficiency here. You can see at the time of this recording that the Australian dollar has already reached this monthly order block that I have marked here. Even though this arrow depicts that we're going to reverse off of here, I would look for further confluences before expecting this thing to move higher. But once we do move higher, the first objective I would look for is this old high, and then this consequent encroachment, which is this level here. Finally, the last section of this part of the analysis leaves a 3-chart format, and we're going to look at the Dow, the Nikkei 225. There it is. And finally, the USDJPY. Move back to a 3-month chart, and I want to note that all these assets are positively correlated. We can see a bearish divergence at the lower high created by the Dow and the higher high created by the other two assets. Referencing this more as a sympathy rally rather than a reversal signal like S&P divergence. The obvious leader of this group is the Nikkei 225. Moving on to the monthly chart, we can use the analysis that I've created for short-term risk off to expect the laggard YM to move lower. This sets up one of my favorite models, where price creates a double top formation, induces further bearish sentiment with traders trying to sell on weakness and then ripping higher to take out the buy side liquidity for where their stops are. I'm looking for the Dow to retrace into the displacement created from this previous monthly candle. If I was trading these assets, I would look for a reason that this market maker buy model first leg distribution is ending, and then look for longs on the Nikkei 225. I'm looking for this retracement to possibly reject at this consequent encroachment. At the time of this recording, this is what I was aiming for. We see this really big wick here for a immediate rebalance here, and into this civvy here. The fact that we had immediate rebalance makes this very bullish. I would be looking for a low-hanging fruit objective of 1.68 for the month to expand towards. So this concludes the section of my intermarket analysis. This is about half my video here. Moving back into my normal template, I now look at market profile. I've already mentioned this before, so I look for ES to either be consolidating, trending, or retracing. From our previous sections, I've already noted that my expectation is retracement, so this section is labeled as a bearish retracement for ES. Finally, for the last section of my technical analysis, I look at the PD array matrix. So I try to be specific in the levels that I'm looking for the monthly range. I can see the low-hanging fruit objective being this bearish rejection block, which we've already reached, and the next objective being this old high is what I'd be looking for. We're approaching it now. I have all these levels marked as discount arrays that I would look for price to gravitate towards. I'm also going to look at the average monthly range. So that's here. What I do is I use it on 6 RMA, and I have this for the chart here. So we can see we have a 263 average. So that would look like if we were going to use this high as an anchor point, 263, is down here. Remember I mentioned the quarterly shift is signaling bullishness for the past 18 months. If I'm expecting retracement, I would like to aim for objectives inside of this range. I don't want to expect expansion. While price could reverse here, I don't pick tops. So finally, after I finished all my monthly analysis, I kind of look over everything and try to poke holes in it. I want an analysis that is very strict and doesn't have any loose ends. So like while I was writing this out, I noticed little errors like calling certain assets leaders against others when it was the opposite. While it didn't affect my analysis, it was just incorrect. So really what I like to do is I like to look over the news of the month. So I use forexfactory.com. I like to review each week of the month and determine a loose market maker profile for the month, similar to the weekly market maker profiles from lesson 3 in the month of March of the 2016-2017 ICT mentorship, but on a monthly scale. So I'm just creating likely scenarios for the month to unfold. If we consider ICT uses normal versus delayed protraction when it comes to the London session, the high or low of the session forming before or after 2 o'clock, we can apply this same scenario to the weeks. So like a delayed protraction would be like a week 3 high. I'm also watching CPI on week 2, of course. I'm just gonna avoid this entirely. And for forecasting purposes, I'm gonna have to wait for this week to close before I can expect anything from this week. I'll try to tape read Tuesday or Wednesday. Like I said, I'm not trading in January. And then finally, I'd like to note that we have a FOMC statement on the 31st of January on the last week of the month. I'm going to avoid this day also. Overall reasonable expectation for the monthly range can be considered a classic Tuesday high of week transposed to a monthly framework. So like a week 1 or 2 high of month to a week 4 or 5 low of month. And if we're looking at the charts now, I've already done a little bit of my weekly and daily analysis, but I've been so caught up in recording this video that I kind of missed this move here. We have a beautiful market structure shift and then retrace it back into this 4-hour civvy and then movements lower, and we're about to break this low. Like I said, this is kind of like the first objective that I was looking for, and it's looking like we might reach it. It's possible for NFP to kind of form a low here and then retrace into this gap, but I haven't done any of my weekly analysis, and this is the part where I usually create a bias because I'm looking at the charts before I look at the fundamentals. I have a completely different thing I do for the week, and I don't want this to affect my bias. So I want to thank you for watching. I had a blast creating this video. Run down every thought I had. It really helped me with building confidence in my analysis. I'd love to do this every month, but the time it took scripting, filming, and editing this was a lot. So maybe I'll post just my analysis of every month, like my script. If that's something you'd like to see, let me know. Again, thank you. I appreciate your time. I'll talk to you soon.